Hello and welcome to the Crypto Chronicle. This is a new YouTube channel. Welcome. I just want to start by saying that this is my first video and this is not something that you should consider financial advice. You should go out and get your own financial advisor if you're looking for that kind of thing. This is just my own opinion on the cryptocurrency market and the broader financial markets as we see them. I want to address something that a lot of people are concerned about right now, and that is that we are already at the top. The bull market is over. What are we going to do? What I want to talk about here is the market has reached this kind of local top. It's the all-time high, around $109,000 right here. And one of the reasons why people think that this is the top of the market is because it's actually being supported by this trending resistance. So this goes all the way back to 2021, where you can see the resistance is being met at both of the all-time highs that happened in that 2021 bull run, and even 2017. This is where we're drawing this back from. Now, I don't know how much weight this holds, but it is something that people have been talking about, and I'm here to tell you that I'm not concerned about this and why I think we're going to go higher. First of all, I want to talk about why we're going to break the all-time high fairly soon, and the things that we can look at to see that Bitcoin rhymes with certain financial indicators and what they are and how it all works. So what we're looking at here is Bitcoin versus the ISM Manufacturing Index, an index that tracks small business data and how successful they are. So below 50, you're kind of looking at a range where businesses are doing okay, usually not amazing, and obviously you can see here this is kind of COVID, this massive dip here where everything was not good at all. And when you start going above 50 is when things start doing really well for businesses. And what you can do is you can look at this and you can put it against risk on assets, and it tends to trend quite nicely with their cycle tops, and that is the case with Bitcoin. So if we look at the 2017 cycle top, we can see it lines up nicely, not only the top but the trend. Once we start going over 50 from a downtrend, right, we start going up and then we go up again, and then it just keeps going up and we hit that top, and then it comes down again and Bitcoin kind of comes down and goes into the bear market. This is the bear market that we're looking at. The next time that it goes above 50 is in 2020, and we get to about here. This is sort of toward the end of the COVID pandemic. We're going into 2021 now. And as you can see, it has this massive peak, really big peak in this ISM index, times with the Bitcoin cycle top of 2021 bull run. And then as we can see, this is where we are now. We have just gone over 50, okay? Last month, we weren't above 50 yet. And what's happening is that we have just trended above 50 for the first time since 2020. From a downtrend going up above 50. The last time that happened was the previous bull run. So what we're looking at here is the bear market and the bull market that is to come. This is, by the way, again, just the ISM Manufacturing Index. You can see it goes in peaks and troughs all the way back to the inception on this chart. And you can. This is the 2008 crash. This is the pandemic, and the peaks. 2017, 2021. 2013 kind of time, which is when it peaked again. 2011, that was the other Bitcoin peak. So, you can quite clearly see it's actually lined up every single time. And I don't think this is going to be any different. Let's just take a look at this. This is the log regression chart for Bitcoin. This is kind of an amazing chart because it shows you what's kind of going on here with Bitcoin and where it could go. What we see here is the log chart on the side here shows you the pricing. It's in thousands, so 100,000, 50,000. What we can see is that every single time we've had a cycle top, it's gone 2 standard deviations above the mean, which is this middle line here, at least, right? In fact, we've never not gone 2 whole standard deviations above this. And here we are in 2024, 2025 is a bit out of date, I think. If we go 2 standard deviations above that, we're going pretty high. And I'm not concerned about the fact that we're only at 100,000 right now. We are probably at the mean right now, which is where 100,000 is. I think this is a bit out of date, but we're going higher. So Now I want to talk about how Bitcoin is lining up really nicely with the 2017 cycle. Now, this is again from the Real Vision platform, their macro investing report. The 2021 cycle was kind of truncated because there was a really early peak in global liquidity and the ISM manufacturing index due to all the stimulus that was released for the pandemic to try and stimulate the economy after the crash. So it's a little bit unusual, and we can't really use that as a basis. What we can use as a basis is 2016, 2018 cycle, that kind of bull run, because that was kind of normal economy time, and that's kind of where we are now, is everything's looking normal. Now, first of all, what I want to look at is how similar these cycles are. We have the weakening of the dollar, and the reason why the weakening of the dollar is important is because that leads directly into global liquidity, which is a big driver for risk on assets. When a global liquidity peaks, it's the same thing as the ISM, they're quite linked. The risk on assets like Bitcoin peak as well. And as we can see here, we have this where we essentially have the dollar rising in strength. And then, we're about here now. Trump wants to weaken the dollar for competitiveness, for exports, and it looks like we've trended exactly the same as then. I would expect the same to happen for 2025, and this is what Real Vision think as well. We look at the global M2, which is the global liquidity, right? We are tracking that to a T to 2017 as well. Today we are, somewhere around here. We've got a long way to go. A long way, and this is pretty well scaled actually, these two charts on the side here. We can see that it's pretty much a direct mirror of the 2017 cycle. This is the big one. So what we're looking at here is Bitcoin versus 2017 from today. Now we can see here a very clear lineup with what was happening back then compared to now. If this plays out, right, Bitcoin is going to basically $1 million this cycle, which I don't think is going to happen. Nobody thinks that's going to happen. Let's be realistic. But it could go a lot higher, and I think it will. It's going to follow this to some extent. This thing on the side here is this axis on the side is the current scale. I don't think this is accurate. I think it might maybe peak absolute blow off top 500k. I mean, we'll see what happens. Who knows? But this is playing out exactly like the 2017 cycle. So we've got far further to go. So I'm not worried about anything really. Finally, on this, we have the global M2 and how it lines up with Bitcoin cycle tops. And I just want to show you this chart that Real Vision provide. So we have exactly these cycle tops here. As you can see, whenever there's a peak in global liquidity, there's a peak in Bitcoin. And it's the same thing over and over again. And now these breakouts in the charts, that we always have these wedge formations in the global M2 chart, where global liquidity is kind of going sideways for a while, and then it breaks out because every 4 years, the governments need to refinance their debt. So we have this breakout, it goes up, it goes crazy, everything peaks, and then it calms down again. And then it wedges, it goes up again, it goes crazy. This was COVID, so it was mental global liquidity, really crazy. And then right here, we're at the inception of the breakout. We've got a lot higher to go, guys. I think we're going much higher. This is all well and good. There's lots of indicators, but why should global liquidity go up any higher? Now, I'm here to tell you that I think it's going a lot higher, and here's why. China is screwed. They are in an incredible amount of deflation right now, and it's probably the worst it's ever been in modern times. Now, deflation is where the economy's prices of everything is just going down, basically non-stop. And if that happens, the economy collapses after a certain amount of time. In order to prevent this, they need to inflate the economy. They need to stimulate the economy with liquidity. They need to print money. They need to turn on the money printer in order to get out of this deflation. Now, this isn't just going to happen in China. This is going to happen all around the world. But China is important because in 2021, the liquidity globally was driven almost entirely by Chinese money printing. However, we also have money printing in the US. Now, this chart shows the US money supply in pink here, and in purple, we have the US debt. And as you can see, every time it goes up, so does the money supply. And the reason this is the case is because they need to print money to refinance the debts so that they don't go bankrupt, basically. They have to pay off the debt somehow. And this is exactly what's happening here. The money supply is just continually going up. We could see in other places around the world, like the Bank of England, they've just cut rates. Rate cuts is a form of quantitative easing, and that is a form of money printing. So we've got other countries. Europe is already ahead of this. We are going to be printing money all over the world. Liquidity is on the rise as we speak. As you can see here, another chart here. This is on Forbes. The Grey Stall of China, they're calling it. This is how China's GDP has literally just basically gone flat, if not declining. And another reason why they really do need to print their way out of this, because if they're not going to do that, if they're not going to stimulate their economy with inflation, they're probably screwed. Now, the interesting thing about this is that China hasn't really got much leverage, and there's a trade war happening right now with the US. So I think that what's going to happen is we're going to see Trump weaken the dollar, like he did back here in 2017. We saw Trump weaken the dollar all the way down, and the reason for this is to keep it competitive, because the Chinese yuan, their currency, is pegged to the US dollar. So I think that he's going to weaken the dollar in order to maintain a competitive edge on China trade. And this is all playing out already, not least because if the dollar is stronger, China are even more screwed because they will not be able to print money, because printing money weakens their own currency and it will ruin their peg with the dollar. So they need the dollar to be weakened. This is an article from a while back, but basically it's just talking about how Chinese liquidity is a major contributor to increased global liquidity, and it has been over the past actually now 30 years since this article has been released, because this was back in 2015. So I just want to say it's not just me saying this. This is ScienceDirect.com. It's a proper study that's been released, proper paper, and it's just talking about the impact that China has on global liquidity. China's liquidity is going up, guys. Global liquidity is going up. Risk on assets will peak, and we've got higher to go. We are not at the cycle top yet. There's plenty of other good news aside from this. There's a lot of macroeconomic factors pointing in the right direction, but we've got some good news to talk about as well. First of all, the US is very pro-crypto now, which is great. We have a new digital assets subcommittee within the US Congress, and we have these hearings happening where they are actively talking about a golden age for digital asset, guys. And this is amazing. I mean, we're looking incredibly bullish on an institutional, on a government level. We also have the SEC being pro-crypto. For years now, they've been absolutely hemorrhaging XRP's price, and somehow they've actually acknowledged an ETF filing for XRP by Grayscale now. This is sending a huge message to the crypto market and to the crypto community. XRP is a legitimate asset for a starter, and the SEC is not playing around anymore. We also have a bunch of other ETF approvals coming, hopefully, guys, at some point. They're getting likely. Trump, Doge, I mean, I don't know how this is even possible, but the official Trump coin has been filed for an ETF, which is crazy. We also have Doge, we've got Solana, so there's a lot of stuff coming. Now, I want to talk about XRP, because XRP is at the moment the third largest cryptocurrency by market cap, and it is a very popular one. I'm a big holder of XRP, and we can see here that things are looking pretty bullish on an institutional level. We've got 80% of Japanese banks set to embrace XRP for global payments by 2025. Groundbreaking move in Japan's banking sector. Every bank set to adopt XRP next week. Now, look, I don't know about this could skyrocket, but this is actually true, guys. This is coming. And it's not just this, but we have the Bank of America, the chairman of the Bank of America, saying that they're more than ready to implement the XRP system within their bank. You can look this up, and they are just waiting on regulatory clarity. We have Bitcoin being bought up by institutions. We have Barclays Bank, a massive bank, buying $131 million worth from BlackRock Bitcoin ETF holdings, which is insane as a UK-based bank. I don't even think the UK banks are really able to provide crypto services. They're just holding this themselves. We also have Abu Dhabi's Sovereign Wealth Fund disclosing substantial Bitcoin holdings, a huge amount, 436 million in Bitcoin holdings. We also have MicroStrategy, or as they're now called Strategy B, buying 478,000 Bitcoin, worth billions of dollars. And this is a publicly owned company now. Talk of strategic Bitcoin reserves in many different US states. We have the US crypto czar coming out and saying that they're looking at the feasibility of a strategic digital asset reserve. We're seeing a massive amount of institutional purchasing, especially over the counter, which means that it's not coming from exchanges. And this is how Strategy B is buying it, and Barclays. well, Barclays is doing it through the ETF, but the ETFs are buying it over the counter. We also have the Ethereum Foundation releasing a roadmap for changes that are coming to Ethereum, which is pretty bullish considering that we're really not that far away from bear market lows right now. We have cheaper transactions coming, we have extra security, future proofing, better user experience. The Pectra is a hard fork that's coming soon that the community consensus have voted for. There's many really cool things coming for Ethereum. I don't think it's a coincidence that people like Eric Trump and the World Liberty Financial were buying about $5 million of Ethereum a day. So guys, I just want to mention a great little cryptocurrency project that I'm a big fan of called Elastos. Now, Elastos is a coin that I hold, and this is not a partnership or anything, guys. I'm just mentioning it because I actually think it's a really cool project. The biggest news here is that a firm called Rollman Capital have just invested $20 million to Elastos for a variety of different things like marketing and development of their products. Now, Elastos has a variety of new products coming this year, not least the Bitcoin Elastos Layer 2 loan app. So the great thing about the Bitcoin Elastos Layer 2 is that it's native to Bitcoin. So you actually put your Bitcoin up as collateral and you get a stable coin loan from that. And there's a new stable coin coming to support this. But essentially, we have a problem, as we see here. And essentially, Bitcoin's problem is that with a lot of them, like I know you can do this on Coinbase, for example, but it relies on wrapped Bitcoin and third-party custodians. This is all in your own custody, guys. So if you're a fan of DeFi, you'll be a fan of Elastos, because the great thing is that you can put your Bitcoin up as collateral, take a loan out in stablecoin, and you don't have to sell your Bitcoin. Therefore, you don't have to realize your profits and pay taxes and things like that. There's lots of benefits to taking loans out in this sense, and all the while you have full custody over your Bitcoin, and the only reason you would lose that is if the smart contract was executed and you didn't pay off the loan properly and they take your collateral. They also have Elasticity and ElastOS, which is basically a big world computer marketplace, as you see here. So there's a lot of cool stuff coming here, and you can look into this. I urge you guys to look into Elastos. Finally, it's also merge mined with Bitcoin. It's the second most secure asset, actually, and it actually uses about 50% of Bitcoin's hash rate, because 50% of miners for Bitcoin actually mine Elastos as well, securing the Elastos network. As I was talking about liquidity earlier, liquidity was the main reason we had this crazy alt season. Elastos did, let's just measure this here. It went from December 2020 to the peak April 2021. It literally did an 858% move, guys. And there was not even any marketing happening during this time. If we see an alt season again, right? Let's say we go from here to here, we go up 600%. Let's just say that would be in an ideal world. With no narrative, just because it's an altcoin, just because it's a random low cap coin, people pile into it, right? Except for the fact that this time we have a completely new dev team. We have money coming into it from massive capital management firms. And by the way, I'd like to mention that Rollman Capital Management actually kickstarted Solana, Ethereum, and Ripple. And all you need to do is look at the market cap of those projects now, guys. And I'm not saying that you should buy this coin. I'm not saying that it's going to do anything for sure. I just like the project. And I think that based on the fact that last time we had a liquidity spike, it did really well, and now we have narrative. As for my portfolio, guys, this is what it looks like right now. I don't feel like I'm going to be changing this very much soon. I'm trying to de-risk as we go through the bull market, as I take profits and basically moving them into Bitcoin, but I'm kind of being profit maximalized right now. My Elastos position is still pretty large, and I'm looking to probably lower that despite being quite bullish on it, just to de-risk. I've got a large index fund position to basically keep myself emotionally stable. I've got a decent amount of cash as well on hand, just to either pump into the market or to keep myself again emotionally stable. Now, I just want to finish off, guys, to say thank you so much for watching. It's nice to see Bitcoin closing this week at around 97,000. I do want to say that it is possible, of course, that we go back down to this potential support zone here of about 73,000. So, be careful out there. Don't be over leveraged, guys. There is a possibility that we are at the top. I'm not saying we are. I don't think we are. I think we're going to go higher. There is a possibility that we're going to go down to this support region and test it before bouncing higher. Anything could happen. Be careful out there, guys. Stay safe with the crypto. Don't over leverage. I'll catch you in the next one. Please do subscribe, like, and ring the notification bell so that you can stay notified. Leave me a comment down below. I'd love to hear from you, and looking forward to seeing you in the next one. Bye for now.